How's it going, guys? Welcome back to mentfx, and in this video we are going to unpack the idea that you can find the traces of smart money, the smart money accumulations, distributions, the transfer of weak to strong hands in any, and I mean any market whatsoever, whether it's currencies, commodities, indices, or stocks. And we're going to do that by going over a few very quick top downs, as well as take a quick look at where this type of traces happen. So just to start off, we're going to have gold. Let's add gold to the overall thing so we can start with that. And taking a look at gold very quickly, you will notice that, and I'm going to talk over this very minorly, you will notice that gold will have areas that are seen as normal supply and demand zones, such as areas that are unmitigated, right? The last up moves or down moves before a move, the last up move before a move, that still has mitigation that needs to take place. You will have price come into those areas and give you that mitigation. Now you get to the lower time frames to confirm some of these areas. Let's get to a much lower time frame, just like this. Zoom in very quickly and take a look right here. You will have areas that you will be able to take from higher time frames, get in deeper on them, such as the 5-minute chart or things of that nature, get all the way back inside here and look for the traces of weak hands being taken out and transferred into the strong of into the hands of strong money or smart money or market makers, whatever you want to call them, with markups that occur that break structure. And as structure breaks occur, there's the last down moves before the up moves that function as the last areas of mitigation before markups occur. Okay, and again, all of this is based in the idea that price will come to an area, will give you some kind of confirmation, and will continue in a given direction. That is present in gold, therefore we can agree that it is present in commodities. Similarly, if we are to open ZAG USD, which a lot of you might know as silver, if we were to open it, have it added, there we go, we'll have it added now, go over to it and take a quick look at it, we will notice that the exact same things again are present. Let's go out to the higher time frame, since I don't believe I've analyzed this. And if you take a look at this, you can even go back in time a little bit and take a look at the areas that held and where you could have gotten trades very quickly. The last down move before not move, unmitigated with the imbalance seen here, you can see exactly where price came to mitigate, which again on a lower time frame would have probably created a Wyckoff schematic here that was tested with this and continued higher to break highs, to break highs, to break highs, take out liquidity and give you areas that you could have partialed at, as well as came to mitigate other areas of supply zones that gave you more setups to go lower before then coming higher. And to prove that very quickly, let's go down to the daily chart. Let's take a look at that mitigation very quickly as is. And again, you can see that same transfer of weak to strong hands. Weak people getting in early, getting taken out. Weak people trying to get in again, getting taken out. The transfers and breaks of structure on a lower time frame that give you entries here, here, and here, and even here at this demand zone right here, that take you to higher prices, breaking more structure. After those fail, you have more weak hands being taken out. Weak hands again getting in early, getting taken out. The breaks higher, the shifts higher on lower time frames, the moves right back down to areas that test it, and continuations higher. Additionally, if you hadn't gone in on any of these, if you were to draw out the last down move before the up move, and notice the mitigation here, as you make your way down inside of this price action again, maybe to a 4-hour or chart of that nature, and you zoom in onto the price action in that area, just like this, and you are to zoom in, you will see the traces of the exact same thing. Lows that are being manipulated, those lows get taken out, price trading above, breaking structure. The expectation would then be that price would be coming back into one of these zones to continue higher. If you were to try to trade this, you take your last down move before the up move, which could be seen as this move right here. You could look to trade that as a buy opportunity. Now that's to say that not every opportunity, and this is present in any market you look at, will work. Most opportunities though, when they're presented to you, will give you the chance to have an opportunity to engage in the market. So let's keep watching this. Let's see what happens. We begin to print some liquidity and it looks like we just kind of take off and we never really come back to the zone, do we? We still could have this valid, so let's just take a look. Then as you can see right here, we come and begin to do the same transfer of weak to strong hands, leaving behind this last down move before the up move. And this would be actually an example of a -1 trade. And again, remember, when we do this, we don't give a shit about losses because we understand how risk management is going to work, and that over time, you will find a lot more wins than you will find losses. And the wins that you do have will not only be more than the losses, if anything, but also will run significantly more. So let's consider this as a -1. This one right here is still valid. So remember that this transfer of liquidity and of the market happens all the time. Let's keep watching this, see what happens. Just watching this, nothing very important. Then you get the markup. As you can see, never really comes back down to this area. Again, you can watch for reaccumulations, such as areas that occur just like this. And now what you have is your last down moves before the up move. That will now function as new areas for you to potentially be a buyer at. Notice how it doesn't matter what market we're looking at, the traces of what we see from a standpoint of smart money are the same. Look in the partial again at you know, this trend line, these equal highs, so something of that nature. Let's just take a look at that. Here we go. Let's see if we get tapped. So it actually does tap us in, right? Looking for partials here, and then looking for it to continue higher. And if we do see the breakdown, we will look for it to come all the way back down into the setups down here. So remember, there was a -1 right here, but this is why your -1s don't matter if you understand what you're doing, right? So we can take a look at this, and very quickly we have a markup. This we'll let it keep running because we understand that we can do that. So this partial right here would be locked in already at about 1 to 1.76. So that's already plus 1.76 over 2, whatever that is. We can open up a calculator really quickly. 1.76 over 2, 0.88. So this is already plus 0.88, which is very, very close to taking care of the -1 that happened right here, right? And again, as it goes, you can most likely have partialed up here, or at this point, you can just keep holding and waiting for highs to break. So we'll just keep holding for now. So a high breaks right here, as you can see, and I probably would have actually mitigated my position to here. So this is where you would have been taken out. So we can take a look at that, and that's a plus 3.02, which is actually, as you all understand from a standpoint of partials, plus 3.0 with divided by 2 because you're taking off partials at the first area. So you're getting plus 1.5 on that, right? So overall, if you take a look at this and this, that comes out to 0.88 plus 1.5, right? So 1.5 plus 1.5 plus 0.88 comes out to 2.38 RR, 2.38 RR. And just like that, you have made back a lot more than that -1 down here, and you're beginning to be in the money, right? So again, this goes to show metals follow smart money. The same things are present. There's areas where you can expect certain things to occur from. Those areas are where you're going to expect entries. You're going to be able to trade those entries based on your own refined way of entering. And if you do fail, you understand that it's not a big deal because you've refined the way you trade, and you understand where and how you are going to have opportunities for even better entries. And now, as you can see, we are technically up on silver. And again, you don't have to believe me that this was fully random, but this was a fully random example. I don't even know where we are in time right now. Oh, this is 2019, exactly. So we're in 2019, doesn't really matter. Point is, if we do zoom out again, let's turn off the replay. If we do zoom out again and take a look at this, you can see that the way price moves and the way it goes weak hands to strong hands is always the same, right? Weak hands taken out to strong hands, the breaks higher, last down moves before the up moves, entries, okay? Now, if you don't like the entries here, you can take a look at them on the lower time frames, and similarly, you will see the exact same transfer of buys to sells. How so? Well, here's that last area that we were looking at. Here's that area again, right? The transfer of weak hands into the strong hands, strong hand liquidations, strong hand shifts above price, last down moves before the up moves, entries. Entries happen, partials, completions, or completions under trailing profits throughout. And there you have it. You can see Wyckoff and smart money present in this specific thing. Now, we know that it's now present in gold. We know that it's present in silver. Now let's take a look at any currency. We'll just go open up one that I have something marked up. Do I not have anything marked up on here? Okay, so let's go on something that I do have something marked up on. I believe GU has a markup on it. Yes, it does. Fantastic. So we get to GU, and a lot of you that have been studying this for a while know for a fact that it happens on currencies. We can take a look again. You have, again, structure being put in a certain way. You have areas of supply and demand that are left behind in multiple areas. Those supply and demand areas will then function as places where either liquidity is created to be taken out later, or will function as areas where there will be mitigation that will result in Wyckoff occurring. Now, what we mean by that is, as we get lower, you will again see large impulses coming from specific down moves before up moves, down moves before up moves, and as price comes back to it, you will again see the exact same provision of weak hands being taken out of the market multiple times, weak hands being taken out of the market, being liquidated by the strong hands switching their bias, shifting, and again undergoing Wyckoff in the last down moves before the up moves, right? So areas like this where you're already valid to go for buys, or have you wanted to, went further and confirmed the area with weak hands being manipulated, shifts in structure on behalf of strong money, last down moves before the up moves, with perfect entries that take you to new highs. Similarly, if you hadn't gotten these, then you have the areas right here present to do the exact same thing with lows being manipulated, the transfer of those weak to strong hands, and the continuations upwards that you will then, again, right, whether you get involved here or here, partial, continuation, trail, maybe you get stopped out here. Similarly, had you gotten this one, partial potentially, or trail, or trail, potential trail, stop out, or stop out based on how risky or how aggressively you wanted to be trailing. Okay, so now we know that the crazy smart money presence occurs in both metals and what appears to be currencies. Now let's take it the extra step. Let's go take a look at something like GME or GameStop or a stock in this specific case, right? Take a look at GameStop. As you can see, just from a quick standpoint, if you were to look at all this sporadic movement that occurred from a while back in those specific zones, and again, I did not trade these zones. However, it's really important to consider what actually went on here, right? Let's take a look at how price developed. As price made this markup, what did it do? Began to take out highs, began to liquidate highs, right? Liquidated those highs, then what did it do? It came to break structure, and where did this move come back up into? The last up move before the down move. We can highlight that again, and you can see this last up move before the down move. And even though this area is really big, what can we do to confirm it, right? Well, you all understand that Wyckoff happens within Wyckoff, and the market is extremely fractal. So as a result, if we go ahead and take a look at what actually surpassed in that area, it's not always going to be clean, especially under the snowflake rule, but take a quick look. You have highs being manipulated, highs being manipulated. That's weak hands being manipulated out of the market, transferring into strong hands, as strong hands do what? Meet objectives such as imbalances, inefficiencies, the last up moves before the down moves, and specifically the last areas where they need to mitigate. Also functioning as a UTAD, taking out those highs, shifting lower, breaking structure, coming right back up to where, right? To the last up move before the down move. Take into account the wicks, take into account the imbalance, comes right back up to test it perfectly, right? And continues lower. Now, if you're unsure about this, what can you do? Similarly to confirming this already confirmed entry, you can get lower and take a look at what actually surpassed inside of here. And as you do, you can see the exact same thing. Weak hands being manipulated out of the market, weak hands being manipulated out of the market and transferred out. The strong money taking market lower, beginning to shift order flow into a bearish direction, and making their way right back up to the last up moves before the down move. So you take this last up move before the down move, and you notice that you have the mitigation here. Similarly, if you're not happy with taking this sell yet, you can confirm what? The area inside here. How do you do that? You take yourself to the lower time frame, which we can't even do anymore because we've gone so low on such an area that happened actually a while back. But let's actually see if we can. So we'll go into here. Maybe a 3-minute might work. There we go. So again, you make your way into here, and although the price action is choppy, take a look what happens when price does get back to its last up move before the down move, right? So let's make it easier to see. There we go. Right, take a look at where that mitigation actually occurs, which is right here, and notice how that happens. You have highs being liquidated, highs being liquidated, highs being liquidated, highs being liquidated. You have the transfer of, again, those weak hands getting taken out of the market early that are unsure about holding this into the strong hands. Strong hands move direction and switch it lower. Again, not breaking structure yet, as you can see, but then coming back up to test some areas here, then breaking again, and then breaking structure, showing you that there is a shift in where they want to go. And where does the move come back up to? The last up move before the down move, never getting above here because the transfer of orders has now put the market lower. And again, GameStop respecting every single structural thing we've spoken about in this entire channel, as well as the supply and demand zones that form and the type of confirmations you get inside them, such as Wyckoff and the transfer of weak to strong, right? Again, occurring on now what we consider a very, very volatile stock. And despite the fact that it's volatile and it's a stock, it is still respecting what we would expect it to do from an institutional perspective. Similarly, there were sells that were available here in the form of, weak hands to strong hands. What's funny is I actually had a sell just above, I believe, this liquidity here. So I actually had a sell that I wanted to take right here. Instead of that happening, It never gave me that move, but I was expecting buys from these areas down here. So this actual last down move before the up move. Now, it might look hard. It might look like there's no entry here, but take a look at what occurred on the lower time frames. Similarly, you have the transfer of weak hands and weak hands, right, with all these lows into strong hands, the liquidations, the spring, right? This is Wyckoff occurring in front of you. You have slow and intermediary breaks of structure that are then lent again with lower time frame Wyckoff confirmation, which is then breaking structure right here in these areas as it gets above the wicks right here and comes to test the last down move before the up move, right? Study the price action here. This last wick right here came to test the last down move before the up move that has imbalance within it, then took off. Now, if you were looking at the overall schematic to be validated, that would be right here. Notice where it got validated with this wick right here. As I got validated, take your eye back to where the imbalance is and the last down move before the up move and notice how price came right into it. Take a look at where exactly it came and you will notice that we went to perfectly what appears to be the 50% of that move. And again, you can argue that this is all based on the presupposition that it's all an algorithm that is delivered as weak hands get transferred out of the market into the strong hands, and you will always see this happen at any of these zones where you're expecting structure to shift in a given direction. So now we understand that this is present on commodities, it's present in stocks, it's present in Forex, and now let's take a look at something like US 30. Because a lot of people have asked me about it, I've actually taken a look at this with some people, and what you'll notice is the exact same thing is present again. Okay, I actually went back with a student of mine and spoke over what occurred on this a while back, but you can do this yourself and notice how it develops and give you setups. What I mean by that is as you see structure begin to break in a given direction and liquidating lows, the transfer, right, again, of weak hands being transferred into strong hands, the breaks above structure, the moves back into potential areas of demand and continuations higher. And again, as those continuations higher occur, you have multiple areas that you can use for confirmation. You can see how price delivers and how price mitigates these areas before moving higher. Similarly, if you take those areas and zoom in on them, you're not always going to have perfect entries on behalf of Wyckoff. But what you will have is you will always be given the chance to view where prices most likely want to go. So as we get lower here, you can again see that same thing occurring. You have weak hands being taken out of the market. The shifts. Then at this specific point, as we shift, we understand that a buy from these areas here is actually very good. However, it's not always going to be hit, which is what happened here, right? And that's fine. That will occur and you won't have perfect entries. Now, if we get lower, there's a good chance that we would actually see something in here that warrants a setup. Now, it's not always going to be the case. If we get much, much lower, you can now see that as we get lower, there's actually more likely than not a 15-second setup here. Hopefully, I can take a look at that in a second. But if you notice, you have weak hands all being manipulated by this last low. On a very low time frame, there's a spring right here, right? You have to think about the market fractally. If you took this area, zoomed in on it on a lower time frame, you're going to see something along the lines of this, and then you have the break of structure that happened with this that broke above the structure present here and here on a lower time frame. Now, at the same time, if you ask yourself, where's the last down move before the up move that occurred, taking into account the wick or even just the body, right? You can draw that out in time. You can use that as an entry POI, and similarly, you will notice those areas where weak hands were manipulated out of the market, price had shifted in structure, had shown you that institutionally it wanted to move in a certain direction, tested those areas perfectly because they need to mitigate these orders at these areas of supply and demand, especially if they're partnered with an area of imbalance because there is unfair price action in those areas, and then you see price take off to the top side. Now, hopefully, I wanted to talk over that before I zoomed in on it because I'm not sure if it's going to let me go that low. Let's just see. But hopefully, if I can get to a 15-second here, it'd be really nice. So yeah, we can't really get that low here. Let's go back out, zoom back out. But let's take another area and look at a very, very low time frame confirmation to show that whether you're looking at stocks or indices, you're going to see the same type of confirmation even on the very, very low time frame. So if we take a look at the 30-minute, let's find something that actually worked for the sake of explanation. And what you'll see right here, ultimately, is prices transferring weak to strong hands and then having structural shift significantly lower. A lot of you can agree with this. We have the structural shift lower, and also what you'll notice is inside of here, you actually have the same thing occurring. So we would, at this specific point, expect prices to come and test the areas up here. Gratefully, it did. And again, you can already see fractally that there'd be Wyckoff inside of here, right? Which is actually testing the last up move before the down move inside of here, which tested the up move before the down move before this, right? So this is how institutionally markets develop. Now, as you're expecting it to get back up into here to sell off again, you can actually be looking for the buys on the opposite side here. And if you take a look to the left, even here, you'll see that we came to test again an area of demand that has been unmitigated. And if you refine that area of demand, you will see the last down move before the up move right here with the wicks included. Draw that out in time, you can see exactly why it came here, what imbalance it had to fill, right? Which was basically this wick to this wick, as well as the imbalance being printed. As well as the liquidity being printed right before it got liquidated. So right here, right? These are both areas of liquidity. A lot of people are watching that to buy, even on US 30. No matter what you're looking at, these traces of smart money and the manipulation and the creation of liquidity are going to be present. And again, you understand this is weak hands right here, right? So remember that you're always operating on all time frames too. You have weak hands taken out. That's the spring. You have shifts above lower time frame structure, and you have the last down move before the up move present with this area right here. Now, if you're unsure about buying this as is, right, which as you can see right now would have been a great buy. And again, as you get involved in this, if you do get involved in this, just like this, you're not looking to just take it like this as a 1 to 6. You're recognizing the price can also continue breaking down. You look at areas like this as what? Partials or completion in this case, right? Because that's where you're going to start looking for your sells. Now, before we take a look at those sells, just to understand this in depth, if you are unsure about this area and you are not happy about the way it's been developing, you can go ahead and confirm this even deeper. How so? Well, you get back in on a 5-minute chart and take a look at exactly what occurred in the specific zone, right? You have, again, weak hands, and weak hands being manipulated out of the market with the moves here. As well as that, you have moves higher, which break structure, and show you that institutionally price wants to move higher from these zones. And you take the last down move before the out move, which is both valid as this move right here, right? As well as this last move right here, which incorporates the idea that this imbalance right here, right, between this wick and this wick wants to be filled. So look what happens in the future. Price comes to fill that perfectly. Now, if you're still unsure about taking a buy from this specific zone, which we've now basically refined multiple times off of multiple areas and multiple Wyckoffs to take back into the highs here, right? Which is how you get to those high 1 to 27, 1 to 26 RRs. Then you can go and confirm this same entry once again, right? How exactly do you confirm that same entry? Now, there's not always going to be a opportunity present. However, if this was something that you wanted to confirm, right, you get down to a much lower time frame. And similarly, as we zoom in on this, you can see maybe even a 15 or a 5 second. Yep. So actually in a 5 second, there's actually a great 5 second accumulation here. If you zoomed in and took a look at what actually occurred here from a standpoint of smart money and from a standpoint of the transfer of weak to strong hands, what do you think you see? You see weak hands, all being taken out of the market. Weak hands being taken out of the market. Then you finally see mini structural shifts short term in the market. So already your last down moves before the up moves are present for buys. That's why you're having these perfect mitigations. Now, if you are using real structural breaks and you understand your structure is here, and as structure breaks here, you understand your last down move before the up move is right here, and honestly somewhere inside here. So you can see that this last down move before the up move, again with the same keys, again with the same things present, with imbalance that you can see from here to here, and notice what it does before it comes to grab it. It builds liquidity just above it with this move, and even this move, right? On a low time frame, that is actually a trend line. That manipulation of the trend line occurs right there, grabbing all that liquidity, fulfilling the area right here, and coming right here. Again, as we're on a 5 second chart, you need to recognize that there aren't people actually sitting there trading this trend line right here on a 1 second chart. But what's happening is when they're watching this market live, when they see a candle, right, do this over and over again. So this is what a candle does sometimes, right? And it actually makes you very emotional about what the next type of move in the market will be. When it does this right here, it's actually doing this on a lower time frame, right? And what that actually means, if you transfer what this means into actual price action on a lower time frame, it begins to formulate liquidity. And when it does that, certain liquidity grabs, such as a move like that, will actually end up making this candle look like what? A candle with a large wick. And what does that make people believe? That we're ready to see bearish price action, right? So these type of moves, even though we are looking at them on a 5-second and people aren't actually trading the 5-second or 1-second charts, actually show you how retail or people that are uncertain about what's happening in the market get trapped and manipulated out of given moves, right? Because this is the same as this is the same as this, if you understand how low you can get with a market. So again, you have valid buys off of this if that is something you're willing to do. As well, if we go lower into here, I believe that we can find an even better accumulation. Or if we work our eyes upwards with price very quickly, we can again see the same thing. What do I mean by that? You can see the transfer of weak individuals being taken out of the market with the strong hands that are then actually mitigating their last areas of sells to buys. And as they do that, they begin to take the market higher, breaking structure. And similarly, if you ask yourself the question, where is the last down move before the up move that has imbalance present? Well, notice this imbalance right here, right? Between this and this high. And on top of that, notice the last down move before the up move, which is this last down move right here. And let's drag that out in time. Notice where it is that price wants to go. And how does price get there? Before getting there, it again begins to build liquidity, build liquidity, build liquidity, liquidity, and liquidity, formulating, again, those short-term channels, short-term trend lines, which act as emotional areas for people to exit or FOMO themselves in with areas where they also want to move their stops, especially if they get in at a lower price. So people that did get in at a lower price are already starting to move their stop losses because they're scared of being taken out. And as a result, they get taken out here, here, and all these areas where smart money begins to take their orders and funnel into large positions, mitigating again those last down moves for the up moves before real up movements in the market occur. And they might even come back a few times, as you can see, right? And those areas, again, if you go and analyze them, will function as higher time frame areas of weak hands transferred into strong hands and last down moves before up moves with imbalance present inside them as last areas of mitigation before real moves higher occur. And again, this is on an indice now. So recognize that no matter what market you look at, you are able to fractally boil it down to its tiniest tick movements, which are all present and in line with the way that smart money likes to accumulate, distribute, structurally shift the market, and go to fill inefficiencies and supply and demand zones. So hopefully this video made some sense to you guys. I know it was a little bit of a long one, but hopefully you now see how currencies, commodities, indices, and even stocks all move within the exact same parameters laid out by this YouTube channel and by my mentorship. And if any of you want to take your knowledge further, feel free to join the mentorship at launchpass.com/mentfx/mentfx. This is the only place I'll ever offer it. And thank you so much for watching, and I'll see you guys in the next video.